Hi everybody, this is Bob Iacchino from Path Trading Partners along with my co-founder Mike Arnold, and this is a weekend update Path Chat covering the futures markets. As usual, we're going to do a week in review and then a preview of important economic data. The week wasn't that heavy in terms of news. We did have some news from Jackson Hole, but I think the most important story from a commodity future standpoint, as well as a human interest standpoint, is Hurricane Harvey. Harvey did affect crude oil prices on Thursday, and then into Friday. On Thursday, we saw a big sell-off in crude oil prices, mainly because Harvey was directed at the areas of Texas that focus on refineries, and those refineries were shutting down and expected to remain closed through the duration of the storm and damage assessments, and that could mean that the storage of crude oil will not continue to draw down because those refineries that are shuttered will not be calling crude oil out of storage to refine. So that's really the price action that we saw mainly on Thursday. Saw a little bit of a rally on Friday. But let's talk about the latest in Harvey, both from a human interest standpoint and then move on to what's going on in the refineries so far. 2 people's deaths so far have been attributed to Hurricane Harvey. A woman drove her vehicle right into high water and a man was killed by a fire. Now, officials do expect that death toll to rise, but we are a developed nation. It shouldn't rise that much, but we'll see. More than 25 inches of rain fell in 24 hours in Houston and the surrounding areas, obviously. The storm has been downgraded to a tropical storm and is expected to become a tropical depression, but it has stalled over the inland part of Texas that it hit. It's turned a little bit north and a little bit east, but it has kind of stalled and is expected to continue to pound the area with rain. There is catastrophic flooding. That is an official designation of what the flooding is like. Water is up to the 2nd level of homes, almost entirely submerging cars. So it is a pretty bad situation. Now, in terms of the refineries, there has been damage assessment that has begun on the refineries. Now, some of the main refineries, this area covers about 4.4% of the nation's refinery capacity. The refineries are owned by Citgo, Flint Hill, and Valero in that area. Now, refineries in Texas City, Houston, and Corpus Christi continue to operate normally through the storm, although there is some small flooding. So that's going to cover about 2.2 million barrels a day of national refining capacity. A Citgo spokeswoman had no immediate comment about the efforts underway for its 157,000 barrel a day Corpus Christi refinery. A Flint Hill spokesperson did not reply to a message seeking comment about damage assessment yet, and that's at their Corpus Christi refinery, which does about 300,000 barrels a day. It's 296 and a half or so. Valero confirmed damage assessments were underway at its 293 barrel a day Corpus Christi plant and its 89,000 barrel a day Three Rivers, Texas refineries. Now, the company's other Gulf Coast refinery continued to operate, and it's a smaller refinery, but it continued to operate, and Royal Dutch Shell said its 227,000 barrel a day Covenant and 225,000 barrel a day Norco refineries in Louisiana, as well as its 325,000 barrel a day joint venture refinery in Deer Park, have not been affected by the storm. Marathon's 459,000 barrel a day Galveston refinery and its 86,000 barrel a day Texas City refinery remained in operation. And then Valero's 225,000 barrel a day Texas City refinery also remained in operation. Now, some of these refineries are going to go into refinery turnaround soon enough anyway. Refinery turnaround is when they shut down refineries to retool to switch the blend of gasoline, this time from summer to winter blend, and then again in the prior to summer from winter to summer blend. Some of those may begin, if they don't have damage, they may just begin that turnaround. So we may have extended shutdowns in some areas of some of these refineries, regardless of whether there's damage or not. Now, this week is supposed to focus from a political standpoint on tax reform. Gary Cohn, the president's economic advisor, chief economic advisor, has said that this week will be all about tax reform, and the president's agenda will now revolve around tax reform for the near term. So that's good news for the markets overall if something can get done. Earlier in the week, there was talk that Congress had agreed upon a plan that had taken away deductions and reduced the rate for both corporate and individuals. But then later in the week, they said that that wasn't really going to a vote. It wasn't really going to be agreed upon. In terms of the Fed and Jackson Hole, we saw some slightly conflicting comments, but the bottom line is that Janet Yellen was not as hawkish as the market would have expected. She seems data dependent on rates, and the data is not great right now. And she was not as forceful as Robert Kaplan or as Esther George were in terms of the market being able to accept the normalization of the balance sheet. So they didn't really get as hawkish a Janet Yellen as they were hoping for. And Mario Draghi was silent as always, although he did comment on the continued global expansion, which the euro took as a bullish statement or a hawkish statement for the euro. Let's move on to the economic calendar. So we're just going to do high importance economic pieces of data, and all times are Central Time. So Chicago time and all of these. And tonight, Sunday, August 27th, nothing of high importance being released. Move on to Monday, 7:30 a.m. We've got advanced goods trade balance for the U.S. for July. The forecast is for a decrease of $64.5 billion. The last was a decrease of $63.9 billion. Moving on to Tuesday, 9 a.m., U.S. consumer confidence for August. The forecast is 120.4, but last was 121.1. So it's expected to drop ever so slightly. Wednesday, August 30th, couple of things. 7 a.m., we've got German Consumer Price Index year over year for August, the preliminary number, expected to come in at 1.8% versus 1.7% last. And then we've got the second iteration of U.S. GDP. And the year over year is what we'll be looking at. It's expected to come out at 2.7 versus 2.6 last. And then we've got the product price index as part of the gross domestic price, and that's expected to be unchanged at up 1%. Then at 8 p.m., we've got China's manufacturing PMI for August, expected to be at 51.3. Some of the Chinese data has been surprising to the upside lately, so that's going to matter quite a bit. Last day of the month, Thursday, August 31st, pretty data-heavy day in terms of high-importance pieces of data. 2:55 a.m. Central Time, German unemployment change and German unemployment rate. The change is supposed to be down 6,000 jobs, and the rate is supposed to come in at unchanged at 5.7. The change was down 9,000 last. It's supposed to come in at down 6,000 this time. We've got Eurozone CPI, the year-over-year estimate, and the core year-over-year estimate. The headline number is supposed to come out at up 1.4 versus up 1.3 last, and the core expected at 1.2 versus 1.2 last. 7:30 a.m. Canada's quarterly GDP annualized, expected to come out at 3.7% versus 3.7% last. That's the second quarter. That's another view of the second quarter number. And then we've got their year-over-year GDP for June, expected to be up 4.1% versus 4.6 last. Also Canadian, also at 7:30. And then we've got personal consumption expenditures core at 7:30 in the U.S. That's expected to be up 1.4% versus 1.5% last. Then Friday, September 1st, we've got first Friday of the month. So we've got non-farm payrolls in the U.S., 7:30 in the morning. Non-farm payrolls expected at up 180 versus up 209 last. And the unemployment rate expected to be unchanged at 4.3%. And then later in the morning, Canada's market manufacturing PMI, we have no estimate on that yet, but it was 55.1 last. And then we've got the U.S. manufacturing ISM and the employment part of the ISM number. Manufacturing, I have an estimate for. Employment, I do not. The manufacturing for August in the U.S. expected to be at 56.5 versus 56.3 last. That's it for the high value, the high importance. You know, a lot of these numbers have secondary numbers around them. For example, the GDPs and the CPIs. But the ones I listed out are the ones the market is most concerned with. So that's it on the review and preview for the week beginning Sunday, August 27th. Let me turn it over to Mike now to let you know what he's seeing on the charts. Mike, it's all yours.
Thank you very much, Bob. So, zooming in on the VIX real quick. VIX getting back down, closed the week 1128. Back from its most recent highs. What's interesting is this is falling and the market's been in congestion, which we will take a look at now. When I say the market, I specifically mean the financial stocks and futures. So, zoom in here a bit. Dow futures caught between two key GAN levels in a channel for the last few days. So what are we watching for? We're watching for an extended move above this 21,885 level. It's either intraday extended trading above there or on a closing basis. If we do get that, we'll be targeting 22,000, nice round number, and this little cluster of levels here. And then above that, 22,132. So those are the key things we'll be watching. If we do break down below the 21,759, we're watching for the test of this trend line. And then the next key level, 21,635, where we have the rising 50-day exponential moving average and the 50% GAN level for this retracement. And then below that, if we break below that, 21,005 to 505, which is 62.5% key GAN level for a major support area. Switching over to the S&P futures. S&P futures also in congestion the last few days. Watching for a move above 2,452, especially on a closing basis. Then we have to get above this trend line. If we do get above that, we'll watch for a retest of 2,468 area, which is a prior breakdown zone. And then above there, we'll be watching for 2,477. If we break down below this, about this 2,435 level, watching for the test this rising trend line. Getting below that, we'll then be watching for 2,416, then possibly down to 2,408, and below that, if we have a bigger sell-off, 2,403. Over to the NASDAQ futures. NASDAQ futures, just like the other markets, in consolidation or congestion. NASDAQ futures holding right at the 50-day exponential. If we break below this 5,816 level, be watching for right around the 5,795 area. Below that, the 5,779 area. And then if we fall through that, we'll be looking for 5,723. On a move back up, we're not going to get exceedingly bullish until we get above this 5,886, which is a key GAN level, was resistance earlier in the week, and is also a breakdown zone. So there's a lot of resistance up there. If we do get through there, we'll be watching for a return to the upper end and this declining trend line right around 5,930. Then if we get through that, we'll be watching for 5,961 to about 5,973 areas. Looking at crude oil. Crude oil also, although it's had some really wide ranges, it's been in consolidation between really this $49 mark and the $47 mark. So those are the two key areas. If it does get above this declining shorter term trend line, which should have to get above 48.50, then we'll be watching for the return to the 49 level. If we get through that, the 49.60, and then if we get through that 50 to 50.25. On a sell-off, very key support coming in around this 47 to 47.07. We get down below that, we'll be watching this for this 46.50 area, 46.40 to 46.50. And if we fall below that, which would take us into this next section of clear path, we'd be watching for about 45.80. Switching over to gold. Gold also in consolidation, although on Friday we ran up to do most new swing highs up to this 1301.40, and we also tested the lower end of the rising rotation zone and another old GAN level about 1282.50. So what we're going to be watching for is a close above this 1301.40 area, and then getting above our declining trend line to take us possibly to 1311.50 to about 1313.70. And then on a really strong rally, we'd be watching for 1325. On a decline, The support's really coming in at this 1289. If we get a close below that, we'll be watching for the 1282 area again. Then below that, 1277, and on a bigger sell-off, possibly back down to the 50-day exponential moving average, which right now is coming in about 1268. Finally, switching over to silver. Silver also in congestion, although a pretty wide outside day on Friday, running down to the 50% Gann level and also testing the 12.5% Gann level. Our key things we're watching for is a close above the 1716 level. Then we'll be watching it for a return to 1732. Then very key resistance between 1742 to 1747 area. To the downside, if we can get a close below the 1689, we'll then be watching for a possible return to about the 1673, and then there's lots of support coming in 1670 to 1666. And on an extended move down to 62.5, that would be our next target, 1655. That's all we have for you on this weekly futures update. Back to you, Bob.
Thank you, Mike, and thank you guys for watching. Don't forget to hit like and subscribe and check out our other weekend updates. Cheers, everyone. Thanks again.